Let me tell you the story of how Trump's crackdown on immigration in the United States ended up costing Barclays Bank £110 million in London, and how it exposed one of the biggest dangers of our financial system at this moment. The consequences of the Trump administration's crackdown on immigration are visible. Families are being torn apart, people are being disappeared, the military is flooding into cities. But at the same time, meatpacking factories have been left to work with 30% of their capacity. Fruit has been left to rot on trees. Agricultural staff is impossible to find because these undocumented workers that have very little rights but contributed $96 billion a year in state, federal, and local taxes have been forced to run, to hide, to stay home. And it's this fact that undocumented workers are afraid of going to work and are not being paid because of it, and are retreating from public life, that brought down a company in Texas that had connections with the financial system around the world through something called shadow banking. Tricolor was a used car sales company that had a very unique business model. Their main market were people who had low credit ratings or were undocumented, because people who are in this situation can't access bank loans easily. And the reason for this is the subprime mortgage crisis in 2008. Banks were giving out loans like candy to people who wouldn't be able to afford it, and then packaging those debts and selling it around the world. And when people weren't able to pay those debts, they brought down the financial system like a souffle, because that's what it was, something full of air. Hence the regulation that had to be put in place to stop that from happening again. But while the regulation stopped banks from doing it, it didn't stop non-banking financial institutions from doing it. But Ellie, you say, they're a car salesman. Yes, but they also provided subprime car loans. And what I mean by that is that Tricolor provided credit. And because they weren't a bank, they had no oversight. It's an example of what we call shadow banking. And Tricolor did exactly what banks did before 2008 and the regulations kicked in. They packaged all of this debt into financial product that they sold to everyone, including Barclays, including JP Morgan, including pension funds. And all of these loans were done without a lot of investigation to whom they were lending money to. Because, like with subprime mortgages, they were tremendously profitable. Because there was no oversight, there are suspicions of fraud. There are, of course, suspicions of fraud. As there are suspicions of fraud on the next company that profited from shadow banking, First Brand Groups, that just collapsed. The whole industry is worth $85 trillion and no one knows what's happening with it. And if the governor of the Bank of England is concerned about it,